Good afternoon. Welcome to ABC 123 Trader. Today is March 28th, 2021. And let's start taking a look at today's video. But before I start, all forms of trading carry a high level of risk, so you should only speculate with money you can afford to lose. You can lose more than your initial deposit and stake. Please ensure your chosen method matches your investment objectives. Familiarize yourself with the risks involved, and if necessary, seek independent advice. And the U.S. government required disclaimer is commodity futures trading commission, trading financial instruments of any kind, including options, futures, securities, have large potential rewards, but also large potential risk. You must be aware of the risks and be willing to accept them in order to invest in the options, futures, and stock markets. Do not trade with money you cannot afford to lose. Alrighty, now let's get into it and give you some education for today. Alrighty, guys. Sorry, it's been quite a while since I've been doing a video. I've been kind of on a hiatus, on vacation a little bit, trading a little bit. Just doing all of this and some programming. And today, what I really want to address, I guess, I have questions. I always keep on getting emails, some from regulars and new different traders ask me all these different questions. As how do you scalp? How do you do this? How do you control your stop losses? Where's the best area to enter? I can't answer all those questions, but I can try to give you an area. What you have to understand is basically it's the structure of the market. I trade the NQ because I like the volatilities and I like the fast moves. But it doesn't really matter what you trade. The bottom line is you have to look at the big picture and you have to look from the top-down approach. And if you looked at my previous live sessions, majority of the time I'll start from a daily bar to 4-hour bar, etc., etc. So what I'm going to show you today is, and the reason why it's so important, and hopefully you might get this aha moment of where to enter and being patient, because majority of the trades is you can enter a trade, but many times people can't not figure out where a target is or where to exit, what is your risk reward, etc. If you can figure out risk reward, if you can figure out I won't say chickening out, but not trading too often, you can be a very consistent trader. So the very first thing what you have to do, and what I'm going to actually go right even farther back in time. I'm going to go to a monthly chart. Okay? The reason why I want to do a monthly chart is, let's see, since I guess we have the Trump years and now we're in the Biden years, let's start taking a look of how the market has been performing right now. So basically, let's go right down to, let's go right to the Trump election and we'll work from there. You could even go from Obama 2008. So in Obama 2008, after the 2008-9 crash, the market kept on consistently going upward and upward. And I think it was 2012 when they got back to their old levels and they kept on going. Trump gets in. For the 4 years, it gets really crazy. Then we also had this big whip out during the coronavirus time. As you can see, this is coronavirus right here. So let's create a region. Here's your region there during coronavirus. Okay? And ever since then, until the election of the new election now, where are we here? November. Here is November trading until the transition. Let's say 21 here. So for the next 3 months here, with the new administration, basically we're right at this time. Now, and the reason why I want to show you this is I'm not saying I don't want to get into politics of who's a better president, who's the worst president. I don't care about that stuff. I'm just looking strictly technical analysis and why it's so important to look at longer time frames. If you have noticed, we've been on such a large run, and then this last year from 2021, stimulus packages, all that other stuff, it exploded. So basically in trajectory, let's go extended line. Let's just even go, this was Obama years. Then extended line, 2016. Basically, that was the actual projection. And then this last year was crazy. So, you know, now we're in a grain of salt. And now, currently, in current status market, currently we're in buying. But the market's been going up. We're expecting a pullback. And then look at this craziness here. So when we start looking at how the market's going to be performing, because it's been so whippy, look at this. We have almost three months of doji counts. Show me 3 months of doji candles all through the years. Yeah, there's a couple there. But with really extreme volatility, the 3 dojis. This is, you know, unsettling times, because we're still also in the, you know, this COVID issues and, you know, uncertainty of many different factors. Okay? Now, from the monthly charts that we've noticed, now let's go to the daily chart. Well, actually, I'm going to back step 1 second. So if you notice for the 3 months, the market hasn't been, it's just been whippy, playing and playing. No bullish runs, nothing. Okay? So remember that. You got to put that in your head. Now, if we go to the daily chart, there you go. On the daily chart, see, we've been whipping up and down. This was the big run up here until that time period, February, March, and now we're in April. Okay? And then that was previous before that. I'm not even going to worry about it. Because we know we've been in such a big range. So as a trader, when you're looking at top-down approach, you got to start wondering, are we going to start getting into serious sell-offs? Are we still just looking for the $50 trade, $100 trade? We still will. But now what you have to do is you got to start looking, like I said, the big picture. With this last COVID installment of $2 trillion, I expected a big bounce, but we haven't seen it yet. So we have to see what the new policies are coming in, see if we're finally going to get a pullback, a real pullback. We really haven't had a pullback forever. And when it does, there's a huge potential of really good runs when we get to the point of pinpointing trades. Okay? Now on the daily chart, now what I'm going to do is, we know we're in a daily chart. I'm going to just start adding one indicator, one at a time, and then we can start looking at our different things. As you know, if you've been following me for a while, I always use my swing scanner. And the swing scanner for me looks at faces, buying, selling. So ever since, I guess, I'll say this is where Biden came in. I'll say January. Let's go back to December 20. What is the date here? January 6th. I can't remember when it was. That was whatever. January 20th. Somewhere within this zone. I'll just put it halfway here. But if you look at the phase work going up, the phase work going down. Oh, actually, we'll put historical in there as well. I have an option now that you can see the patterns. So every time a phase kicked in, you know, I create a dotted line on the line of the sand. And what you can see is when the buy phase kicked in, we went up, sell phase kicked down, buy phase failed, but came back to the price point we needed to, and now the sell phase, because we're playing its uncertainty, it did go down, and we're still down, and now we're going in literally 3 hours, we're getting into the buy phase. So on that line in the sand, I'll start looking at how the market will move. But because I looked at the monthly and I said dojis, 3 dojis in a row for 3 months, now we really have to watch how this market will perform. Okay, so we know there's still going to be a lot of whipsaw because we had 3 months of whipsaw. We're in a new phase. We're in March now, so the options expire at 21st is finished. So we got a 3-month run, and we've got to try to figure everything out. But now, when we go to there, for myself, it's whenever I'm in a phase. This is for me. I will try to keep my mindset looking more for this phase direction. If it is a buy phase, I call it the green, I will look for more buys than sells if the opportunity arises. And if it's selling phase, I will look at more selling than buying. The reason why is I have a higher probability for myself due to the experience of running this computer, the software, of being a more consistent trader. If I knew I was on the sell phase in this red zone here and it turned around, you know you have your run here. Buy phase, we had a good one, and then it destroyed it and reversed up. Okay. And now, when we go to the 240, I'm going to configure this. Add. Oops, cancel. Sorry. I'm going to add I'm going to add a 240 candle. So I don't have to do this every time. So now, if I look at a 4-hour chart, you can see it's still whippy. And you might be asking, okay, Mike, what are you getting on this? It sounds like you're rambling. But what you need to understand, once you get to this point, the top-down approach is trying to get your mindset. So we know monthly, unstable. We're at, I didn't do weekly, daily is we know what phase we're in. And now we're going to start, now myself, because I know what phase I'm going to be entering, thinking of going long. There still might be some shorting opportunities before the actual move. But now I'm going to be looking at the 4-hour chart, and then the key is to look at the structure of the market. This is where you start trying to design your game plan for the day, maybe for the week. Okay? Now what I'm going to do here, I'm going to put a longer time frame in because we're in a 4-hour session, just to see how everything's been playing out. And when I talk about structure, what we're trying to figure out is where the institutions are basing their positions. Okay. Now, if you add up the hours, if this is a 4-hour candle, look at this. We have, once it hit this zone, we had 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 times 4, okay, 36. So we had 36 hours ranging in this zone before the move. Same thing here. Because it is a tighter marker right now, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. You know, so 12 times 4, you know that? 48, boom, going down. So you know these are the areas of interest where the market makers like play. So if we have, you know, what did I say, it was 36 here, and we go 1, 2, 3, 4, 5, 6, 7, 8, 10, 11 maybe, I don't know, 44 hours. So you know this is where they want to increase their position or decrease their position depending on what they're planning to do. And if we know that, and I'm going to close this phase out here, what we want to do is to try to find, before the big move, for example, we'll go back in time here. As you can see, they've spent many hours here, they did a pop, and they spent many hours here. So if I look at it, 1, 2, 3, 4, 5, 6, 7, 8, and you can also include this in here and a little bit in here, a lot of volume of setting up for the run. What you want to do, you want to put your line in the sand saying, they will come back down once again. Okay? They'll do the run, they'll load up again, and they'll do it a few times. I put it here because the banks always need, or the institutions, they will always need a better price. They need to get the best price point because they have way too much money and they need to buy a lot of contracts. Once they are satisfied that they have enough position to move the market, this is when the big punch is. But they will always come back. And they might come back later here, but you'll notice these block areas, these blocks of buying and selling, or you'll notice they'll do that punch over and over and over again. Because I'm in the futures market, currencies will show it a little bit easier. But for example, before the last move down here, here's a perfect example. Because we were in the sell phase. I'm going to move this order to the last area of interest before the big move. And I'm going to do it again 2 times. Stay within that range. The first initial one was the first impulse move, but this was the big one. So you can even do it from, let's see, right about here. That's a big range though, I don't like it. Whatever. But as you can see here, within here, the first little impulse, but this was the main one. Once we get into this area, it wants to reject. As you can see, it tapped here, and reject. Now, because we're on a 4-hour chart, once we break our line, our zones of interest, there's 200 points. Breaking through again. Back to these other block areas. 377 points. Even these little mini ones, 127, so there's a few $1,000 moves. Okay, but we're looking at a big time frame. Because we are day traders, we still have to pinpoint more. So what I've done, I've created, and I've had older indicators like stop out, which I still use, and I'm going to use in conjunction. I made order blocks just to find areas of interest. Okay, now as you can see, what the order block will do, I'm looking at the time frame before the impulse move, it will draw a line in the sand. Okay, now because these are little mini order blocks within larger ones, we can't, it's almost, I won't say it's impossible, but you'll have to work it down. But I use a swing breakout to make sure when it's in effect. So if there's too many lines in the sand on a longer time frame, what I can do is, let's say if I'm going to swing 5, now I only have very few block orders, as you can see. I'll put it to, let's say, swing strength of 3 for now. There we go. No, it's still not. We'll go back to 1. I wanted a sensitive display. Because I am in a really, really big. Okay, so I'm going to put it as sensitive as possible on this one. I don't care if I see the minis, but I will look at the big picture. Now remember, I drew this line in the sand here. Oh, and I should have drew the line on the sand maybe up here, somewhere within that zone. As you can see, this region. Sorry about this region. Between those 2 lines, see how it kind of entered in the area and it's breaking higher and higher. Basically, it was a little bit higher, a little bit more. But if we were waiting, we can take these trades. We can take these trades. The last order block is right here, so we're going to wait for it to come up here to sell again. Once it breaks, we're going to switch. Because we're on a buy phase, if we're looking back in time, and if you were a bank, what do you need to do? You need liquidity. So if I'm going to do liquidity and the buy phase is kicking in about 3 hours, and I'm looking at the structure of the market right now, personally, if I had all that money in the world, I need a better price. So I would actually, on the first day, possibly, it all depends, I have to see when the market opens, because the banks, they're the ones that make the decision. I would rather come back down here, where this line in the sand is, load up, and then go. Because I'm going to buy phase. I need that right price point. So I want to push it down a little bit, maybe for the first day, turn around, and then. We don't know until it actually happens. But with this block order, what we can do is, we can go down in time to a 60-minute chart now. Now we have other blocks within blocks, because now we're looking at a 60-hour chart. But guess what? We have 2 areas of interest where there's possible liquidity. Now, if I go to a 15-minute chart, because we are on a super sensitive time frame, let's go farther down. Now we have 1, 2, 3 areas of areas where it could tap, reverse, and ultimately tap, reverse. Okay, so what I do is I created for myself a swing streak, but I'm going to use like the day trend, specific time frame. So I'm going to use a 240 chart, but I can look at a 15-minute chart, or what I can all, and then because I have that set up, I know this is the longest time frame a bank likes, but now I'm in a more sensitive area. Now what I can also do is, let's say I want just 2 time frames, I can add another order block. So one more order block here. I'm going to change the color. And what I'll do is I'll use a 1-hour chart. Now I know where the 1-hour resistance is, and I know where the 4-hour resistance is. And you know what I like? When I open this up, look how close the 1 hour and the 4 hours. So what I like, this is going to be an area of interest for me to trade. And if it really goes to the bottom, probably the bottom of this one. Now, because I created, if this chart gets too noisy, oh, and just wait, let's take a look at the other one. There's 2 lines in the sand here as well. Now let's tighten this up. Now that's my area of interest. So these are the 2 major regions I presume the banks will like to go before continuing on. Okay? Now because I have too many lines in the sand, what I'll do is, since I had it set up, those are the 2 areas of interest. I actually had one more here. I might have put it just maybe a warning sign of the 1 hour. Now I have a clean chart. Okay? Now what else you can do in conjunction, and then now if I go back to a 1-minute chart, okay? Let's say I like trading a 1 minute. It doesn't really matter anymore because I have my 4-hour blocks on a 1-minute chart, and I have my zone of interest. Okay? Now what I can do now, then you can start adding your other indicators. If you want to use day trend, you can use trend cloud. But the thing, what I'm finding out is I've been working on this for a little while, and if I use this in conjunction to my original one about stop outs, and stop outs was a trending indicator to think, I was trying to think like a bank. Okay, now let the stop out get in effect. And remember I had a previous indicator. Let's go to the end. So I'm on a 1-minute time frame. See, we have stops up here, possibly of liquidity, coming down, stops, and here is that big group zone here. Remember we had that 1 hour way down here. It's up, and then here's our ultimate area, and then we had one more stop out way down here because that was the ultimate low of when the trend changed. So we got this kind of region right here. Okay, so you can use that in conjunction for looking for targets and areas. And what I'm going to do is I'm going to remove all drawing objects. Let's clean this up so we can see the chart a little bit better. What I'm going to do is I'm going to increase the line of the stop out just by 1 so we can just see the lines a little bit better. We are on a video here. There we go. So if I was trading and I'm setting up my game plan, see how the last stop out just knocked everything out here? Ah, it's just amazing. But what you could see is they took all this liquidity. Market's going to be opening. I have a feeling because it is a buy phase, they might sell off like crazy, knock out all these stop outs, get to this zone, possibly down to the lower zone for the first day. Once they're satisfied on the buy phase, they can work its way up. Or what they're going to do, one or the other, get up these zones where this last stop out is on the 4 hour, then sell off like crazy, grab this, and then finish your run. It's going to be one of two that we're going to find out. Okay? And that's about it for this video. I do have on the Discord, I have the new updated version. But what I want to show you is structure is very important, and because we went from a long time frame, try to find areas of interest of exactly where these banks are trying to set up their positions, because they have all the liquidity in the world. Now we have a game plan. Okay, other than that, you guys have a great weekend. Just make sure you pinpoint your trades, trade safe, and you guys have a great day.